Let's switch gears and talk earnings with Tesla set to announce their third quarter results in just a couple of hours. Investors muted. Shares are down about 4% this session. It's one of the top losers on the NASDAQ 100 today. Earlier this month, Tesla said its deliveries dropped 7% quarter on quarter, but that they still aim to keep annual target deliveries of 1.8 million vehicles for the full year. Here with us on set is Tom Narayan. He's global autos analyst for RBC. Thanks for taking. I know it's a busy time in your space right now between everything going on with the big three and now Tesla. What's your feeling going into the earnings this afternoon?
Yeah, obviously expectations are pretty bad, pretty low. They lowered the delivery number. A lot of that had to do with some production cuts that happened, and they did telegraph that. I do think consensus numbers may be a little too high at 17.7% automotive gross profit margin. So they probably could miss that number. But really, ultimately, I think the focus really should be on the 4Q number and whether or not they can hit this 1.8 million number for the full year.
It's a stretch goal, right?
Yeah, that would mean they hit 470,000+ for the fourth quarter. They maintained the target. I do think a lot of investors
Have they ever
question
done that
whether
before?
they can do it.
Have they ever hit 470?
No, they haven't. 460 was the closest 2 quarters ago.
Interesting. So they need to hit that 470 number to justify the current price?
No, just to hit the 1.8 million that they've targeted for the year. But I actually think a lot of investors are kind of missing the plot. I think they're focused too much on the car business. You know, this is really a company, I think, that's pivoting to become a tier 1 supplier and then ultimately a winner in autonomy. Elon says that on the conference calls. Past 2 calls, you know, ultimately that's the goal.
Well, before we talk about the kind of big picture autonomy goal, the supplier part is really interesting. Just explain that for a second. What role do you think they could end up playing in the auto market in the next couple of years? Absolutely.
So we all know about the charging infrastructure wins they won. Incidentally, today, BMW announced that they're joining it. Wow. They were a loud vocal player saying they would never join it. So it seems like you have to join it, right? It's almost like a prisoner's dilemma. And now after that, there's batteries. They're doing 200 gigawatt hours of expansion. That's 3 million batteries a year, all IRA subsidized by themselves. And then they
for other automakers as well, or?
Exactly. I think, well, initially be for their own production, but 3 million incremental cars on top of what they're selling. We'll see if they hit that. Probably, I think what they'll do is sell those to other car makers. They also do power electronics, that's inverters and e-motors.
Is that a good business? You know, and I find this angle fascinating because they have such a head start. They have the capacity, and the rest of the industry now desperately needs these products, especially made in America. What would that mean for the business model compared with what they've done over the past decade, though?
Yeah, I mean, it's not the most profitable business, but I don't think that's the goal here. The goal is, for lack of a better word, Trojan horsing into these OEMs, right? You did it with charging infrastructure. Now you can do it with batteries and e-motors. Once you get in the door, and some of that is software, now you can get in with what you really want, which is licensing FSD, which is the real money maker, and which will expand the entire auto industry by
FSD
trillions.
Meaning what, for those who don't know?
Well, their term is full self-driving.
Okay, full self-driving.
Not appropriately named, but it's really a level 2+ product where you drive where your eyes have to be on the road, but your hands off the wheel. But it is an incredible product. It only probably has around a 5% take rate of Teslas. We think they're going to lower that price, get an increased take rate, and everybody's going to see how profoundly amazing this product is.
Right now, it's what, about $16,000 or something like that if you go with the full service drive.
It was 15, then they dropped it to 12,000, but they're going to drop it even further. That's about $200 a month. Yeah.
So let me ask you on the charging point, where so many people are switching over or accepting the Tesla standard. What does that do to the other suppliers in that area, the charge points and others, Easy Go or EV Go or whatever?
Yeah, it's a good question.
If I'm one of them, I'm getting out of the way.
I mean, it is probably optically negative, but let's not forget, we've seen a slowdown in EV demand lately, and a lot of the reasons that consumers have pointed to is a lack of adequate public charging. So honestly, this is a rising tide lifts all boats. There's a lot of charging infrastructure that needs to be built in this country, and we think there's probably space for everybody.